Hi and welcome to Magic Scanner website, a fundamental stock selector for KLSE and SGX financial market. You're about to learn the secrets to raking in double to triple digit return per annum in trading or investing, no matter how much time you've had to prepare. It doesn't matter if you've never had any past experience or education, this Magic Scanner will tell you everything you need to know without spending too much brain power. This is unlike any tool you'll find out there. It's the edge that most analysts and fund managers want or have. Go ahead and get yours now.
Right. A very good morning to all our like and premium subscriber. Welcome to our Friday chart clinic dated the 8th of March 2013. This is the agenda for today, and we have a very special topic today. Partly it's got to do with the Wednesday. On Wednesday night, we have our Magic Scanner webinar training. For those of you who attended, would find that there are some new enhancement to the old Magic Scanner, and going forward from then we are getting feedback from our premium members on how to make it better, and that's one thing great. It's a living system. So as the day progresses, the Magic Scanner, as you can see, we are able to use it more conducively to able to scan. Now this is the Magic Scanner as it stands for the month of April. Now we have the sector in here. You could actually sort out the sector, which in the past you're not able to do so. Okay, so you can do this and you can actually sort it out. So that's one thing great about it. So the Magic Scanner, which is available for the premium members and also for those free trial sign up, that's for 2 weeks. Now on the same note, let me just have an announcement on the for those of you who I did get a few queries from some of our members, and I wanted to know about our next foundation course. So our next foundation course will be held at our office at Jupiter Securities in Kuala Lumpur on the March 18 and 19. Okay, on the March 18 and 19. And what are things that you'll be getting in our course for our foundation will be, let me just show you what you'll be getting. Okay, this is the one. Okay, so you'll be getting our the regular Friday chart clinic. We'll be sending you also the course notes. We'll give you a copy of Bill's book, which is a millionaire exit strategy, or 48 tips, as well as one of my first book that I wrote, Becoming Rich Fast. And we also give you a 3-month trial on the MetaStock software. But actually, the MetaStock, you can actually we are using an older version, the 7.2. And also the historical data. I think what's more important, we also give you a TAVA filter, a trading above volume average. That's where we can actually filter out the stocks on the technical side that you're able to do a trading. On top of that, you also be getting a long-term and a short-term system for our 1.5 day foundation course. For those of you who came to our foundation course earlier, you can resit back here, FOC, no charge at all, on the March 18 and 19, which is the Monday and Tuesday. So take note of that. That's our foundation course for March 18-19. Okay, so you can do a resit. You don't have to pay anything. And for those of you who is interested in coming, we still have a couple of seats more left, which is next Monday, Tuesday. And now we also have a special offer. Now if you bring your friend along, you'll be deducted 100 ringgit off for both you and your friend. So we are really encouraging couples to come, especially a husband and wife or father and son, to really come and learn about the market, to really know how to manage your own financial. I think all of us would agree that financial education is the key thing to building successful wealth. Okay, would you all agree on that one? Getting the financial education. All right. Okay. Now, along the same line of the foundation education, we have built I probably need you in 5 minutes. No, 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 go on, you go on, you go on. We also currently we have our mid-year promotional specials. The TradersTruthReview.com. We are having our new premium membership sign up. You'll get a 10% off from the price off. So that is a mid-year special promotion that you have. So for those of you who is in the borderline of deciding whether you want to sign up as a new premium members, so take advantage of this opportunity. There will be a 10% off from the retail price, which we actually charge at 99 ringgit a month. And there are many benefits of it. You can actually go to the website to really take a look why you want to subscribe at all. These are the benefits between light and premium membership in here. We cover a lot. We actually have the closing bell, the case study, as some of you may have seen in our posting. We're able to tell you what stocks were able to move earlier before and what you should do with it. And this is deemed as an educational site. So think about it. I recommend those of you who've been following my website to upgrade yourself to a premium membership in here and take advantage of the special offer. Right now, I want to pass the floor to our U.S. correspondent as well, our Gold correspondent, Mr. Bill Wilmine, to speak a few words about the current economic situation. All right, here you go, Bill.
Okay, good morning, everybody, and thank you for coming to our program this morning. I have a few things to share with you. The first thing is, last night I spoke with my brother, who is a retired businessman. He's living in Florida now. And I asked him about the economic situation there. And he tells me that inflation is becoming a real problem now in his area. Food prices continually going up. Gasoline prices have virtually doubled since Obama took power. And the job market, although the government is saying everything's wonderful and they're creating jobs, yes, they are creating jobs, but these jobs are service jobs, flipping hamburgers at McDonald's, in clerks at Walmart, minimum wage jobs. And because of inflation is picking up so dramatically, people are struggling just to survive. And so that means there's a massive increase in people getting food stamps, entitlements, benefits, and a free lunch. So this is the background in America. And in that background is still massive quantitative easing. Over $80 billion a month is going in. They're just printing money. So in his opinion, he said you have to focus your investments in hard assets. Get some gold, get some silver, get some oil-related stocks, get things that are real assets, and that will protect you. And then we talked about another issue that's quite interesting, and that was demographics. And demographics is why is it that growth in Europe, in Australia, in the U.S., in Japan, why are growth rates so low? And we talked about that because we'd attended a webinar by Martin Weiss, a very famous analyst in the U.S. And he talks about this. The growth rates in Europe are like 1%. In the U.S., they were negative in the last quarter. Japan is barely above 1%. But if you contrast that in our developing world, especially in the MIST countries, that is Malaysia, Indonesia, Singapore, and Thailand, you have growth rates of over 5.5%. In fact, Malaysia just had a growth rate of over 5.5%, reported by Bank Negara last week. Now, here's the deal. Why are growth rates in this part of the world so much better than in the developed world? The reason is demographics. You have much younger people in the workforce here. In the U.S., people are getting older. The baby boomers, they're living longer, so that means they need more government welfare and entitlements and Social Security, and they're living longer. It costs the governments more to feed them and take care of them. Whereas in Asia, you have a much younger demographics, and this is where the growth is. They have the spending power. So what I told my brother, I say, look, you made a reasonable return last year. We made 17% on your Singapore account, and we made a reasonable return on the Malaysia account. I say, look, Charlie, I think you should put some more money in because why invest it in the U.S. When you can invest in this part of the world and take care of the demographics. And you guys are lucky being in Malaysia, because you're right you're insulated from what's going on in the developed world. There's a decoupling, and while you're in Malaysia, invest in the quality dividend shares that we've been doing, investing for you. And with that, there's another thing, that there's another hidden risk that is facing. It's like a giant shark in the water, like a great white shark, and you don't know about this shark because he's a very quiet shark, and he's there lurking, and you're in your little fishing boat, and then all of a sudden this shark is going to jump up and is going to break the boat in half, and you're going to die. And what is this hidden risk? The hidden risk is interest rates and bond rates, which are historical lows. In the U.S., the lowest interest rate on bonds in the history of America. And there's no way but this interest rates to go up. When that happens, that's the end of the share market bull run. And that's where you need to have at least some of your assets in precious metals to protect you from this coming collapse. And it's going to come. It will happen. It always does. Fiat money systems, in the end, always go down the drain. So keep that in mind, and be careful, be prudent, invest wisely. Look for solid companies, blue chip companies, dividends. And according to my brother, he feels that the quantitative easing, this party will go on for a few more months. And so we still have time to allocate our assets and make sure we don't get caught in this bond market collapse. But we will alert you when the signs are that it's going to happen. So anyway, keep in touch and have a great week ahead, or next week and the weekend and so on. Okay.
All right, thanks a lot, Bill. Okay, so that's sort of an outlook from Bill. Now there was on the magic scanner yesterday when we did it, we have a couple of questions that people asked. There was a question sent out here. Is that what are the main fundamental criteria for selecting good stocks in here? And they were looking at the minimum growth rate, earning consistency, what's the minimum, and revenue growth minimum, and what's the dividend yield greater than. Now this is a very good question, and just like Bill was really asking just now, we are looking at really low growth rate in some of the countries that they have over in these countries. So what is going to happen now is that how do you know what kind of growth rate? Now one of the things that you can do if you have magic scanner, you can this is a magic scanner screen that can you see this magic scanner in here? How many of you actually has tried on the magic scanner as a free trial? Just a show of hands. Just type yes. You can get a free trial there. Okay. Anyone? Have used the magic scanner? Right. Anyone who used the magic scanner? The free trial or the premium members? I'm sure some of you have. Just can you type yes, you have used it before? Alright, good, we are getting it. Alright. So the things that you can actually use is you can actually go to look at the 2-year growth rate. Right, a 2-year growth rate that you go, and you can actually sort it out by so-called descending. So you can see the 2-year growth rate. This is really good. You can really see the whether it is ascending or descending. Let me just okay, good. Right, not clear. Can you hear me? Can you hear me? Okay. Yes, could barely hear you. Can you hear me now? Let me just check the sound again. Can you all hear me? Okay, good. So this is the one. I hope you can hear Mr. Choi. Okay, Bao Yi. So this is the magic scanner in here. If you have access to it, this is as part of the premium members. You can sign up. You can actually let me just refresh this again. You can look at it. Okay, so this is the one sorted out by the here, and you can use the 2-year growth rate. You can sort it by this descending order. Let me just get it. Okay, descending order in here, so you can see now here where we have. Now some of these I don't really think some of these are genuine, more than 1000% in here. So what I want to do, I want to see those that are really growing by something like maybe a double-digit figure. So this is where I would want to look at to search for, right, between, here you go, between 20 to 30%. Okay. So the 2-year dividend growth, so that will tell you what are the stocks like in here, and then from here you can actually narrow it down. So back to the how much is the premium membership? Oh, okay, just go to the website there. Okay, in here you can see the prices just down here. Okay, find out about that one. Okay, or you can email me later. Okay, so immediately you can actually see that these are the growth rates. So you can actually track it down. So the question is, the minimum growth rate, I would say, has to be a double digit. It all depends, actually. What we are looking at, I would actually look at minimum of 2%. To me, I don't feel that earning growth rate is important, because, like it or not, we are in a low growth world condition. So, and remember, if you are doing value investing, sometimes you're not looking at growth. You're just looking at the potential dividend payment. So the growth rate is very subjective, whether it is growth shares or is value shares. But definitely for number 4 here, I always look for dividend. Now if you can see here, I also have the dividend don't lie. This is the custom criteria selection under Benjamin stock criteria, Warren Buffett, and the dividend don't lie. You can see I'll actually look for between 4 to let me see if I have dividend here, between 4 to 9% dividend yield. Okay, I think I'll talk about it in length on the magic scanner. So if you have it, I also have the training video here. So those of you who have logged in, you can actually use the magic scanner criteria video here. You can click on it. So there's actually a training video to tell you how the stocks are selected and how you can do the hands-on. It's everything all in here. So you can see this. Okay, so let me just stop that. I don't want that to go on. Okay, so this is the magic scanner, and also we have the introduction. This is the hands-on tutorial on that one. Okay. Now, interesting development. So that's what I want to cover. Now, the next interesting development that I have is the magic value rating, which is for the next release. I've talked about this on Wednesday, the magic scanner training. Now we are doing the magic scanner webinar training every month. I believe it's the first Wednesday of the month, just to get people up to speed how to use it. I think that's very wonderful. As I get feedback like this, how to improve it, then I can really educate some of our clients to be both technically savvy as well as fundamentally savvy. Because I felt that from the last survey that we have last year, a lot of our follower did not make any good decent return. Now you all have known the kind of return I've made on my website. You can go and actually see it on the March, okay, the March report. Just want to show you where the March report is. Okay, so this is the one that we made, and you could see we actually netted about 14% return per year net since 2003. Now if you follow the process that we do, and this kind of returns that you'll be getting, if you like this kind of return and you think you're happy with it, then this is the right methodology that I recommend. But if you're looking for 14% return a month, I'm sure some of you does have that in mind. This is not something right for you. Okay, so that's my key message in here. Now the magic value ratings is something that we are doing in. Now you have seen the magic scanner. If you don't just become a user, what we are currently doing now is embarking on the new way to rate it. A little bit more about the magic rating. Now this is a project that we did with our research group. So you have the magic scanner rating, and what it does is actually taking a cut from the stock performance guide. I've been using the DynaQuest stock performance book for the last 10 years. How many of you have heard of the DynaQuest stock performance guide? Okay, how many of you heard of that? Okay, good. You have, right? Now the stock performance guide, in there they have this thing called DynaQuest rating. We actually rate it from 1 to 12. So that the higher the rating, of course, the better it gets. But I find it overall, it only issued twice a month. Oh, sorry, twice a year. They only issue it twice a year, which is on March and then on December. but subsequently there is nothing in between. So the fact that we want to be closely keeping, because as an investment manager in here, I'm managing clients' portfolio, so I have accountability to my clients. I have to make sure I make money for them, and I have shown you we have a very proven track record over these years. And as a matter of fact, this right now I'm writing all my performance letter to bill my clients. So I mean that's how we should do it. Okay, losing my sound again. All right. I'll try to speak closely there. So the things that we look at the 900 plus stocks in here we extracted from Bloomberg. We compile it and we look at the factors. Now this is what we were talking about, the revenue growth. What are the revenue growth in here? You can see the revenue growth history, the growth rate. So we actually look at the weightage from here. And let me just show you a little bit of background how we're doing it. And I believe on the next, this is the weightage that we have, right? This chart here. So the next release of the magic scanner, hopefully we will get the magic value ratings for it. So I do have the results here already. You can see this rated 4 out of 10. For example, some of you may want to know what is public bank ratings. Okay, so public bank ratings is here. Let's find another one. Okay, let me just get that one again. So public bank, yes, public bank is only rated 4.48 based on its revenue growth. Okay, so that's pretty interesting. You might want to know what is rated number one, the highest rating one, right? This is the list that is sorted. So this will be available on the Magic Value Scanner, together with the Magic Value rating. So that, in my opinion, what I'm trying to do is really try to build a fingerprint or database of all those high performing stocks in the KLSE as well as the SGX. Okay, so this is an ongoing project that we are doing to put it into the Magic Scanner. For those of you who may know, next Saturday I'll be giving a very special talk in our office on the March 18, right? A DNA for above average return. This is also taking a piece of work from our research work that we have done, and I'd like to share it with the premium subscriber and live subscriber how to look for above average return for individual stock portfolio, right? So we are talking about somewhere above 12 to 14% return. Now if you're looking for that one, this is a talk that you may be interested to know. So if you're a Jupiter or client, you should get the invitation next week. Hopefully I'm able to put up something for you and send it out to you, for those of you who is interested to come for the talk, because that is where I will actually delve in deeper about the DNA to find above average return. Okay, so that's what I just want to touch on. So next week we will probably continue with what I have here on this factors to compute the magic value formula. How do you like it so far? Let's just hit some feedback. What do you think of it? Okay, what do you think of it? Okay, good. Thanks, David. All right. So now that ends our Friday chart clean. Now we're going to go on to analyzing the stocks now, okay? Which is KSL and Hap Seng Plantation and United Malacca. So if you have any stocks for me to look at, now is the time to give it to me. So the first one I'll look at is the KSL.